Good evening, TheoTrade. This is Corey Rosenblumen. You're watching the Theo Nightly video for the 23rd of March here in 2021, and we're still playing the pullback. That's the dominant thesis, at least, or the plan in motion for very short-term trades. Remember, the videos are designed to help us look at things that are working right now and what the future might be. So we are seeing yet another, what we call pullback or retracement. And when the market goes uptrend, it's higher highs, higher lows, higher highs, higher lows. But that doesn't mean the market goes straight up. The market can wiggle and squiggle, or what we call swing, or specifically pullback. And that's what's happening at this exact moment. We are getting a pullback in price. So this is a little swing to the upside and a steep pullback. A swing higher, steep pullback. Think of this like a rubber band. If you stretch a rubber band a little bit, it's going to snap back, well, not too far. If you snap the rubber band or pull the rubber band a little bit too high, it's going to snap back quickly. So that is the logic, at least for the moment, with a pullback. Now again, this is short-term type of tactics, and we're underneath, at least in the S&P, the 4,000 print. And that's where we are at the moment. Now the NASDAQ, the tech sector, has pulled back deeper. So that rubber band has been stronger or pulled further away from the price and snapped back quicker. So we are seeing an overshoot to the downside or general weakness in the tech sector. And that includes the NASDAQ, XLK, which is our ETF. And if you want to trade the Qs, we discussed this last week, this steeper pullback in the Qs. All those go together. So those are the plays in the NASDAQ, but the Dow is stronger because that made a new high. And that high, it's an all-time high. It's a little reversal against it, but it's 33,000 on the index Dow Mini Futures. We do see that pullback usually toward the 20 or the 50-day moving average or some type of trend line. Remember, stocks don't go straight up. They swing up, swing down. Impulse up, retracement down. And that builds out some of the short-term swing trades, but also intraday tactics. With the Dow, the Russell actually has been really very strong, very, very strong. And we see the consecutive up days in a row met with steep pullbacks. The most recent time was earlier in February, 1, 2, 3, 4, 5, 6, 7, 7 days in a row straight up. And the most recent time was early here in March, 1, 2, 3, 4, 5, 6, 7, again, days to the upside. And that rubber band just got pulled and snapped, if you will. And that snapback took us into a trend day to the downside where, if you don't trade the Russell, you might have missed that in the sell side activity of today, 23rd of March, the S&P was off about 0.5%. The strongest was the NASDAQ, and that's only down about 1/3%. Dow was off 1%, but the Russell, it was off over 3% today. And looking at that on an intraday chart, you can see exactly how pervasive or just persistent the sell side activity was. That is coming off of an overbought or higher than expected play for a rubber band snapping back. But it's not just the Russell. Crude oil had another steep sell side activity day. So as of the recording, crude oil, the contract CL, traded down about 7% in today's session. And that's just the 1 minute chart. Taking us to the daily chart, we see the same logic of this overextended, inflation-driven, or just economically sensitive crude oil market. Again, futures contract CL. And this uptrend was snapped, broken. There's our snapbacks. And the most recent sell side day was here on the 18th of March, followed up by today's session, which is another type of sell side activity, or if the title of the video should be snapback or rubber band pullback. At the same time, the equity market fell. The bond market, it's a bounce. It's a retracement, still a retracement, but it's a rally. And this is TLT. This is the bond ETF. And it's still downtrending, but it does not go straight down. It feels like it, certainly feels like it, but it doesn't go straight down. And the bond market notwithstanding. That is also a snapback or a pullback or a retracement within the broader picture of a sell side activity. These are the big picture names. And we can look at gold, and gold is somewhat similar to the bond market. Somewhat similar. Only because we had the strong upside in late 2020 and the bond market a little bit before that, so 2020, a strong upside move. And the most recent price activity has been a downtrend. And that's gold and bonds. They tend to go a little bit together. They're not perfectly correlated, but they still trade with the similar logic. And we're seeing a pullback. Again, retracement. The trend is down, but that is a retracement. Again, with the bond market, the trend is down, but that is the last 3 sessions at least has been a retracement. So that's where we are on the big picture as we come to the later part of March, with the market still overbought, still overextended, and shallowing out. It's still up, but not quite as violent or relentlessly up that we saw earlier in the recovery phase after the coronavirus crash earlier in the year. So not a whole lot. This is going to allow us to be a little protective or defensive. We're not pressing the long side, but not quite yet pressing the short side, but we're letting the market tell us that. The market is uptrending, but it is not straight up. It is volatile. It is gapping, and it's giving us room to trade on both sides of the market, long and short, high to low, or pullback, snapbacks, and retracements. That logic plays out with SPY, spiders, the SPY ETF, and of course any other type of ETF, which includes the Qs, or the IWM. This does allow premium selling tactics above these highs, and if you wish, put selling premium tactics beneath, but always keep those hedged or protected. So these are ways to trade within a market that it isn't really, it's still moving up, but it isn't moving up with dramatic force. It's more stabilizing, or think of it as maybe going a little bit more sideways. So that can give rise to a lot of different short-term strategies. And we're just talking for this video on the broader perspective, but the same logic can take place within individual stocks themselves, including Amazon. That the rectangle still holds. The 3,100, 3,400, we saw the stock price dip down just under 3,000, but has since recovered. That again is a sideways trading range. And we can look at individual stocks, a quick glance before the video ends, to see that the stock's making new 52-week highs. It's a very narrow list today. Only 11 companies in the S&P 100, and they include United Healthcare, Home Depot, Cisco, Texas Instruments, and some others. And we'll look at quickly at UNH, Home Depot, and Cisco. So UNH, again, uptrending, not powerfully or impulsively, but still drifting to the upside. And then Home Depot is a sideways similar to Amazon, which is more sideways than trending to the upside. It's going flat. It's going nowhere. But that does give rise to short-term trading tactics. For example, going long or with call spreads toward the bottom of the range, and long with put spreads or short call premium above the high of the range. And finally, just to look at one more stock, Cisco, which is making a new high, but probably itself is again best described as more sideways than directionally bullish. Something that is very directionally bullish would be Caterpillar, but it itself, or the stock itself, is experiencing a typical rubber band snapback retracement. That is where we are, the bigger picture as we push toward the end of March. This is Corey Rosenblum with tonight's Theo video update for March 23rd, 2021.